Ladies and gentlemen, welcome back to the channel. Donald Trump just fired Lisa Cook. She's sending a lawsuit into the court system to try to keep her job, presumably. I don't know. There's a lot of weird things going on. Lutnick had a lot of comments today. Trump commenting on Cracker Barrel's logo. Yeah, that sent that stock up 5% today. The next 24 hours are going to be absolutely important, okay? Nvidia reports earnings. Now, this one is going to be big, okay? For the headline S&P, for really you could even say energy, obviously data centers, the entire AI trade, okay? Nvidia is going to be very volatile coming out tomorrow in after hours, and we will discuss that here in this video, but I just want to tell you, long story short, I don't think Nvidia is going to be the catalyst that causes this market to go through a seasonal correction, as some people have suggested, okay? Now, Nvidia, yes, it's up a lot. It's basically at all-time highs, okay? You're pricing in a fair bit of good news, okay? Could you see the stock come down a little bit? Sure. But I don't think we're going to get any kind of disaster from Nvidia earnings. Now, besides that, we will go over the economic data as well as the other earnings that will be coming out here throughout the rest of this week. Ladies and gentlemen, we have a very important update for you for this Tuesday afternoon. Hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video if you are trying to get in on the ground floor of some of these small cap AI stocks with 10, 20, 30x opportunities. Okay, we're going out, putting in the work, finding the stocks that Wall Street has not discovered yet, and investing in them. Could you lose money? Yes. You could lose all your money. Sure, that's the disclaimer. Okay, we are outperforming 98% of Wall Street. It's no surprise. Okay, even on a day like today, down a little bit. Portfolio's up 69% year to date, and I think the outperformance is going to get even larger into the end of this year. After this seasonal weakness period, I do expect to see a very large end of the year rally for this market. And into 2026, things get even more exciting. So check it out if you guys would like to. Link down below in the description of this video. But with that said, on to today's episode. Now, in your broader market news today, Fed Cook's lawyer says they will file a lawsuit challenging the attempted firing by Trump. Now, this was the letter that was sent, or statement, about Lisa Cook and being fired. Okay? It says, pursuant to my authority under Article 2 of the Constitution of the United States and the Federal Reserve Act of 1913 as amended, you are hereby removed from your position on the Board of Governors of the Federal Reserve, effective immediately. The Federal Reserve Act provides that you may be removed at my discretion for cause. I have determined that there is sufficient cause to remove you from your position. So Trump last night fired Fed Lisa Cook over the whole mortgage fraud scandal. Now, I think Trump had a pretty good idea that stocks wouldn't care too much about this, that it's not as impactful as, like, say, firing Powell. There's a good and there's a bad to this, okay? The good is that more rate cuts, right? There's one less hawk that is now no longer on the Fed. Even today, the odds of rate cuts are going up about 1%, from 84.1% to 85.1% for your odds of a rate cut in September. So that's fine and dandy, and that's likely why the Russell is outperforming today. You also seen the dollar fall a lot as well on this news, and we'll talk about that in just one moment. The bad news, though, is that it does mean the Fed is less independent, okay? Less independent. So, again, from a Wall Street perspective, if Trump can just go out and fire anyone, what happens during the next inflation crisis? does the president just say, nope, that doesn't exist, fire anyone that is, talking about inflation, and boom, you have an inflation disaster, right? Or vice versa. If a president doesn't want to admit there's an economic problem and wants to fire people that are, in favor of cutting rates and helping the economy for political reasons, can the president just go out and fire them? It sets a pretty rough precedent, as Wall Street could say. Now, the dollar falling today is also a positive for markets. Why? Because let's say you're Apple and you take in $20 billion of foreign currencies. You report earnings in US dollars. So with those foreign currencies, that $20 billion, you take it, convert it back to a weaker dollar, you get more dollars to report on your earnings versus a stronger dollar. If you have a stronger dollar, then you get less dollars, okay? You may have recalled companies talking about FX headwinds or, earnings on a constant currency basis, okay? Terminology like that. It has to do with the dollar. If there's a lot of volatility with the dollar in any given, quarter or period in time, Wall Street, likes to try to, cover for that, right? That our earnings would have been this if the dollar was constant. Okay, so the dollar falling is good for multinationals, companies that take in currency that is not dollars, that reports earnings in dollars. Now, the Pentagon has planned for weeks to deploy troops to Chicago to cut crime and tackle homelessness and aid in arresting illegal aliens. Donald Trump says today that Cracker Barrel should go back to their old logo. The paper presented at the Jackson Hole conference that argues U.S. government debt could climb to 250% of GDP without triggering higher interest rates, per Bloomberg. A court dismisses Trump's administration's lawsuit against all federal judges in Maryland over immigration order. And according to Scope Ratings Agency, they say the French government collapse is the most likely outcome and would be credit negative. Walmart CEO Doug McMillon has said that the effects of tariffs on spending has been somewhat muted. Modi refused Trump's calls 4 times in recent weeks, according to a German newspaper. Modi is the Prime Minister of India. Bank of England's man says, I stand ready for a forceful policy action in the form of larger, more rapid bank rate cuts should the downside risks of domestic demand start materializing. USCB Consumer Confidence says the share of consumers expecting a recession over the next 12 months rose in August to the highest level since the April peak. CB report says consumers' average 12-month inflation expectations picked up after 3 consecutive months of easing and reached 6.2% in August, up from 5.7% in July, but still below the April peak of 7.0%. And Apple has told Insider Talks about buying Mistral and Perplexity. Scott Cicerelli says, a retail analyst for Truist, said retailers are raising prices due to tariffs, but not nearly to the degree that might have been expected in early April. Barkin says today long-term interest rates are within historical norms. Barkin says without immigration, workforce growth is basically zero. And this is the funniest shit ever when I hear this. Quote, U.S. stock market hits its most expensive valuation in history, surpassing the dot-com bubble and run-up to the Great Depression. This market is nothing like the dot-com bubble, okay? I can't speak for the Great Depression. That was long before my time. But this market is nothing at all like the dot-com bubble. That is a pissed off bear, whoever said that, okay? That is someone pissed off that they are not in this market. This market is healthy. This market is nowhere close to a bubble. Barclays says that the Federal Reserve will cut rates 25 basis points in September and December. Brainerd says the Fed is likely to cut 25 basis points at the September meeting. U.S. Commerce Secretary Lutnick says the market has learned what we're doing is an excellent job. Nick says we all agree interest rates should be lower. And Lutnick says that mortgage fraud is black and white, defending Trump of firing Lisa Cook. Brainerd refers to Trump's move to oust Fed Governor Lisa Cook. Ex-Fed's Brainerd says this is unprecedented attack on the Fed. Brainerd says Trump moves the risk higher than inflation and long-term rates. Barclay says the U.S. economy is in a stall with a 50% chance of recession in the next 2 years. This is no, okay? The U.S. economy doesn't just fall into a recession. You need a catalyst, whether that's Trump and trade or, whatever it is. Like, there has to be a catalyst to cause this. There was talk that if China does not give the U.S. magnets, that there could be a 200% tariff put on China. That would cause maybe a depression, okay? Like, that could be a catalyst. But, just saying the economy is in a stall and there's a 50% chance of a recession in the next 2 years is basically worthless info. It says the U.S. needs to make sure we are also in the game. Lutnick says if a business needs help, Trump will consider a government stake. Lutnick on U.S. stakes and companies says it's time for the U.S. to make sure we win in business. Lutnick says the U.K. government just nationalized British steel. And Lutnick says there's no sovereign wealth fund as of now. But he says we are going to see a national and economic security fund. And Lutnick says on U.S. stakes and companies, he says we need to see where the U.S. is adding fundamental value. Chinese negotiator heads to Washington for trade talks. Senior Chinese trade official Li Shenzheng will visit Washington this week for meetings with U.S. trade, treasury, and business representatives, marking the first such talks in the U.S. Capitol during the tariff truce. Discussions are expected to cover soybean purchases, tariffs, and tech restrictions, though tensions remain over forced labor concerns, export controls, and fentanyl-related trade. The visit comes as both countries explore regular dialogue and a potential Trump-Xi summit. BMO Chief Risk Officer sees U.S. macro outlook improving. And Morgan Stanley says today they see Fed cuts starting in September. Morgan Stanley now expects the Fed to begin cutting rates in September after Chair Jerome Powell signaled greater concern over the labor market risks at Jackson Hole. The bank forecasts a 25 basis point cut next month, another in December, and then quarterly 25 basis point cuts to a 2.75 to 3% terminal rate by the end of 2026. That's earlier but slightly shallower than its previous outlook. Still, a September move isn't guaranteed. Strong payrolls or tariff-driven inflation could delay cuts. So that's what we need to be watching for over the next 5 weeks or so. Heading into the next Fed meeting is, what does the economic data look like? If the economy looks really strong, and inflation comes in hot, that's not good. If the economy is strong but inflation comes in low, that is good. Now, if the economy is weak and inflation is high, again, that's really not good. If they're both weak, I guess that's okay. If the economy is weak, inflation comes in weak, maybe that could be okay. But the bottom line is you always want to see the economy doing as good as possible, as strong as possible. So you don't want to see weakness. Now, durable goods orders today, as I expected, came in better than expected. Durable goods orders month over month were expected at -4%. They came in at -2.8%. Last month was -9.4%. So you came in better than expected. That's a good sign, again, for the economy. Still negative, still not a great number, but better than expected. Durable goods orders excluding transportation came in a lot stronger than expected at positive 1.1% versus the consensus of only positive 0.2%. S&P Case-Shiller home price year over year came in at positive 2.1%, in line with the consensus. CB consumer confidence came in at 97.4. The expectation was 96.2, so that came in a little bit better. Richmond Fed manufacturing index came in at -7. Expectation was -17, so that was better. Manufacturing shipments at -5. A lot better than the expected -20. Richmond Fed services revenues came in at 4. The expectation was 1. And Dallas Fed Services Index came in at 6.8. The expectation was 1. So across the board, the economic data today came in better than expected. Now, tomorrow is a pretty slow day as far as economic data, But yeah, big but there, because Nvidia reports earnings tomorrow, and Nvidia is going to move the markets a lot. It's really going to move the S&P and the Nasdaq a lot, but it's also going to move the entire AI trade, right? Whether it's small caps or mid caps or AI adjacent names, energy names, right? There's so many different areas that are tied to the AI trade at this point. If Nvidia has good earnings, it's going to give a boost to everyone. If Nvidia has bad earnings, specifically bad guidance, well, it's going to be a drag on a lot of different areas of this market. Now, with that said, you have Snowflake, CrowdStrike, HP, Viva, Urban Outfitters, Five Below, Pure Storage, and NetApp that report tomorrow and after hours. Tomorrow pre-market, Kohl's, Abercrombie & Fitch, JM Smucker, Williams-Sonoma, RBC. And then even today and after hours, you have Okta, MongoDB, Box, PVH, Joy, and some others. And then Thursday pre-market, Dollar General, Best Buy, TD Bank, Bath & Body Works, Burlington's, Dick's Sporting Goods, Ollie's. Thursday and after hours, Marvell, Dell, Ulta Beauty, Centennial One, Affirm, Gap, Ambarella, Elastic, and Petco. And then Friday pre-market, you have Alibaba. So yeah, the next really couple of days, even heading into Friday, we have big economic data and major catalysts that are going to move this market. So with that said, let me know your thoughts. Again, we are in a seasonal weakness period until really like the first week or two into October. So like the next 5 or 6 weeks could be a little choppy from a seasonal perspective. Even Tom Lee is expecting a bit of a, like 5% correction between now and early October. I don't think, we're going to see that unless we get some kind of surprise news from Trump, another tariff or something that really shocks Wall Street. I just don't see that at this point, personally. I think we kind of consolidate here. We're not really going to skyrocket in the next 5 or 6 weeks, in my view. But if we just consolidate here and then get into October, November, December, as the holiday season starts up again, as a rate cut comes, hopefully with lower inflation and a strong economy, a focus on AI, the economy should be getting a lot better next year. Big, beautiful bills, pretty stimulative. You could see a strong case for an end of the year rally, a quite aggressive one. And, 2026 to be one hell of a year for stocks, specifically small caps and AI. That's where I think is gonna shine bright next year. So let me know your thoughts on this down below in the comment section. Hit that like button and subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.